Hello everyone and welcome back to XM.com. You are watching the weekly technical outlook video for the week starting Monday, April 29th. I'm Christina Barthenido, investment analyst, and at this video I will share my view on dollar yen, euro dollar, and WTI oil futures. We have a couple of important data releases in the week ahead, including the US non-farm payrolls report and the ISM manufacturing and non-manufacturing business PMI readings, which might provide which could provide some insight about how the US economy is performing. But what will be more interesting is what the Fed will decide on the about interest rates. So recently we saw inflation data coming out higher than expected. That increased the odds about whether there should be another rate hike in the US, and consequently that helped the US dollar to move higher. Today, looking at dollar yen, we see that the pair hit the 160 level earlier today before it fell aggressively to 154.50. That sharp downfall increased speculation that Japanese authorities might have intervened to save the Japanese yen from additional losses. So the question here is whether we might see more red candlesticks in this market and whether Japanese authorities will intervene again if, for example, the Fed signals their probability for a rate hike. But overall, my opinion is that Chief Powell might use a more neutral communication and leave investors to look at the data and then figure out by themselves about what will happen with interest rates. So from a technical perspective now, well, the technical indicators are already signaling an overbought market. So technically there is potential for more downside, but that uptrend could stay valid as long as the price trades within this bullish channel and above the 154.80 level. And the outlook could also stay positive if the price also manages to hold above the 153 and 153.83 territory, where this flat support trend line is located. Even not if the price pulls lower and more importantly breaks the 50-day moving average at this tentative support trend line at 151, that could worsen that could shift the bullish outlook to neutral. Now, in the event of more upside, if the Fed signals potential rate hike, that could boost the US dollar. And in this case, I will look to see whether the pair will finally exit this bullish channel above the 158.80 territory, in which case it could rally up to the 161.65 area where this resistance line from June 2023 is located. Now looking at euro dollar, euro dollar might get affected by the flash CPI data coming out tomorrow. The forecast suggests a steady headline inflation at 2.4%. On the other hand, the core measure is expected to fall to 2.7%. So any signs that inflation is not moving towards the 2% target, or it's moving gradually, that could still help euro dollar to move lower. Perhaps investors might think that a June rate cut might be less likely. But for now, the odds are around 70%. That's a strong probability. And if the data support that case, we may see euro dollar pulling below the 20-day moving average, which is currently at 1.0720. And in this case, if the pair also breaks the bar at 1.0688 and crosses below this short-term bearish channel at 1.0650, we may see a downfall towards April's low at 1.06. Below that, I expect a sharp decline towards the 1.0514 territory. If you look at the technical indicators, the RSI is still below 50. The stochastic is set for a downside reversal. So it seems that the bias is not on the bullish territory. perhaps a move above the 1.0743 level, which coincides with the 30.2% Fibonacci retracement of this downfall, could help the price to climb towards the 50 and 200-day moving averages at 1.0787. This is where the 50% Fibonacci mark is located. Not far above that, this descending trend line could be important to watch near the 61.8% Fibonacci of 1.0830, the break of which could take us as high as 1.09, and closer, of course, to this descending trend line from May 2021, which rejected the price back in March. And finally, looking at WTI oil futures, while those might be affected by the peace talks between Israel and Hamas, it will be quite interesting to see whether the two sides will conclude to a deal which might include the release of hostages. In this case, Israel might postpone any attacks and may postpone any scheduled attacks. Moreover, the Japanese PMI figures could be also important to watch, since China is the second largest consumer of oil. So if the data show a continuous recovery in China, that would signal stronger demand for oil products, which could limit any weakness in WTI oil futures. So from a technical perspective, that rebound near the 50-day exponential moving average has increased the odds for a continuation higher, but the price is still below this descending trend line at 84. So I would like to see a clear close above that boundary before I target again April's high of 86.92, and perhaps also shift my attention towards that resistance line at 87.93, a break of which is needed in order to challenge the 89.20 and 90, the resistance territory. While the technical signals over here coming from the RSI, the stochastics are still positive. I mean, despite the weakness in the RSI, the indicator is still above 50. The stochastic oscillator keeps trending up, so there's potential for additional increases. However, if the price drops, continues this last week's pullback below the 82.45 and 81.47 territory, where this constraining line and the 50-day exponential moving average, as well as the 23.6% Fibonacci retracement of this applet are located, then we may see a bearish continuation into the 79.10 and 79.68 region, where the 200-day EMA is located. Then below that, I expect another important battle somewhere between 77 and 77.45, since that support trend line is currently located within that region. So that's all about this week's important markets. Thank you for watching, and see you next time. Bye bye for now.